What do we mean by noise? Noise can be if the message is coming from, if your organization hierarchy is that the message is coming from top to bottom, then it should be very, very clear. No ambiguity in that one. It's not about different perspective. No, communication is always be done through company's goals perspective, right? So this is, the order that is coming from the top management, and you receive the same information as the CEO is, delivering to you. There is no distortion in that one. It means the message should be perceived as it is like intended to, right? There is no gossips involved in that one, right? There are different, videos, YouTube videos. I couldn't find that link. I couldn't download that one. Otherwise, I would show you here. They just showed you the how message are transferred into organization, and they just took like a big line, and they hide their, they mask their faces, and only one person who can see. And they told that you just need to make actions that you are starting a bike. And when these action coming to the last part, it becomes something else. Like you are doing something, washing the car or something. So message word was that you are starting a car or you are starting a bike. But that message at the end, when employees received, it was totally different. So the crux is that the communication should be free from any bias, any noise, and should be free from any ambiguities. Everybody must understand that exactly the way it is initiated. That's it, right? In that case, the work can be done in in that time. Plus, it will help the companies to achieve its strategic goals. Okay, the controlling function ensure that plans are being followed. Like I told you, you are on the track or not. So the feedback in the form of performance reports that compare actual results with the budgeted or essential part of the control function. You budgeted that this is going to cost us 20 million, and now it cost at about 19.5 million. It means you have a good control, right? Or 2.2 million is just, a rounding error. It can be a good control as well. So planning and controlling cycle, if something will happen, then you move back to square one. So first you formulate long-term goals. To achieving the long-term goals, you make short-term goals, right? And then what happened? You start implementing those short-term goals. You direct and motivate, and then you control. If actual results are not according to what you planned for, then you again go for step one. And in the middle one, there is always decision making, either in implementing, directing, and implementing the plans, directing and motivating. Either this is controlling, either this is making long-term plans, short-term plans, or comparing the controlling performances. There is always decision making. Okay, now let's talk about the differences between financial and management accounting. Here we go. The financial accounting users are external users, right? Who use those financial accountings. The users are so external persons who make financial decisions. For example, in financial accounting, the figures, the amount, or the reports that you generate, they are used for external purposes by external users, not from insiders, not from companies inside management. So for example, income statement, balance sheet, they are not produced for manager, they are also produced for investors, creditors, for government, right? In contrast with the managerial accounting, the users are the insiders, the managers, right? For example, controlling reports, performance reports, they are not made public. They are for decision making. And who make decisions? Insiders, mostly managers and top managers like CEOs, CFOs, like that. Time focus. In financial accounting, the focus is historical perspective. In 2020, we have sold this item and we have made this much profit. We have paid this much like taxes. So you see the past tense here, right? In managerial accounting, the future emphasis. For example, budgets. If we hire two more workers, our productivity will be increased. We produce more. We will produce more, right? If we change the price, we will sell. Our sale will increase. If we control our fixed cost, our profit will be, right? So the focus is more on future perspective. So now tell me, so verifiability versus relevance. Verifiability means it can be, uh, it can be verifiable. It means from authentic sources. So which one is authentic? Financial accounting information or managerial accounting information? The authentic would be the financial accounting information. Why? Because it is signed, and we have auditing signed by the appropriate authorities, right? So we have written, this, report is, verified by SEC, Security and Exchange Commission, like that. But in the process of this verifiability, you lost the timeliness. You lost the, the relevance. For example, you need all this information right now, but you cannot trust. Why? Because auditing is going on right now. The audit report will come, and then you can trust that, okay, this number is right or not. In the meanwhile, maybe the information is not relevant for you. So that's why financial accounting is verifiable. You can trust that because many professionals they signed that one. But managerial accounting information is not verifiable. It is generated on the programs, and all of a sudden you just believe that one and you make decisions, right? Plus this is insider use. It need not to be signed by CEO, some auditors, like that, right? And then precision versus timeliness. Correct information is financial information because we have a history, we verified that, we saw the receipts, we saw the books, we matched this, everything was good. It's precise information. But in the process of this precision, we lost timeliness. So that's why if you go to the websites of a company to download their annual reports, they are not issued on 31st December on closing of the accounting year. They are issued after 2 or 3 months. Why? Because the process of audit, verifiability, and this is going on. The external reporter, they will sign it, and then CEO will sign it, and CEO will write a message that this year was like this and that. So they lost 2 months or maybe 1 month, and that is not relevant in some cases to make decisions. So information that is timely is the managerial accounting information. What if the raw material prices rose by 10%? How it will affect in our profit or our costs, our taxes? Then a manager can go and just make a program or make alterations like that, and they found the reports, and you check that. That's it. Timeliness, right? Subject. The primary focus of the financial accounting information is on the whole organization. What this organization is doing during the year, income statement. What is the worth of this organization, whole organization. But the focus of managerial accounting, it can be the whole organization or it can be a segment. What is my HR department is doing? What is my production department is doing? What is the cost of this employee, specific one? What is the productivity of this employee? How much, if we, fired 3 employees, what will happen to this production facility? If the production facility is producing and marketing are not doing, what is the comparison between the productivity of marketing and production department? Because there is always war between marketing department and production department. Marketing department always complain that, look, we brought you the orders, but it is the fault of the production function, they are not producing enough. The production department will say that it is not our fault. We are producing day and night, we are having double shift, triple shift work, right? But they are not, they are giving us fake orders, bluffing orders, and the order is cancelled, but we already made that product. Now they are not selling. We did our job, we should be given bonuses. The marketing department will say that, look, I just take the orders, I should be given bonuses, right? So there is a constant war between production and marketing department. So that's why the focus of this managerial accounting is on the segment of the organization. Plus the law, like we talk about the GAAP, General Accepted Accounting Principle in accounting. So we must follow some guidelines. Why? Because the information is for outside purposes. For outside purposes, there should be some standard we need to follow. For standard, there are some rules. So rules are set by GAAP in US, and in other outside US, they are specifically designed countries GAAP or IFRS, which is International Financial Reporting Standards. Different one, a little bit different one. But for many